We just seen different billing types in our previous video. We will now see the accounting entries. So we'll take the same scenario. So here is the contract, and this contract is to implement SAP to a client, and that is for $12 million. So the duration is presumed to be 12 months for a easy explanation. So now in our first scenario, which is one-time billing, the billing can happen at the end of the contract, the start of the contract, or anytime during the contract. The start of the contract, end of the contract, anytime during the contract, right? So let us suppose if the billing is being done at the start of the contract, the general entry would be customer account data to, it won't directly go to revenue, but it will go to initially deferred revenue, right? Deferred revenue means we are deferring our revenue for our future periods. So all 12 million would initially be going to deferred revenue account. And from here, at the end of each month, we'll take it to our actual revenue account. So deferred revenue account data 1 million to our actual revenue as per AS 606. You can say the credit will be again 1 million. So, and in the second month, this account will not be repeated. However, this will continue till the end of the month, and by the end of the 12th month, all the revenue whichever is initially debited will be completely credited to revenue account. Thus, this clearance account, which is called a difference revenue account in our case, this case will completely be zero. The entries are like this. So initially, the start of the contract, customer account is debited, deferred revenue is credited, and that will completely be going each month $1 million to our revenue account. Okay. In the second case, at the end of the contract. Now, in this case, the billing is not at the start of the contract, but at the end of the contract. Since the billing is done at the end of the contract, you don't bill a customer, and incidentally, you don't debit a customer during any of our contract, but only at the end of the contract. But how would you recognize revenue? Since you don't have a customer, you would initially be recognizing using a unbilled receivables accounts. So you will be initially debiting this account. Since our revenue is one each month, we have to debit $1 million, and the credit will be our actual revenue account, which is as per our AS 606, and you can even you don't even have to maintain, but however, you can maintain as per your customer requirement these still accounts, and the credit will then be $1 million. And every month you have to recognize the revenue by debiting unbilled receivables and creating revenue account. And at the end of the month, when you actually bill the customer, you shall then credit this account, so that whatever is debited earlier, it will then be set off. Then this revenue clearing account will also become zero. The entries will be like this. So you are initially debiting the unbilled receivable account and creating one revenue account. It is continuing like this, and at the end of the contract, which is on the 12th month, here also initially you'll be recognize the revenue and then only you are billing, right? So customer account whole 12 millions will be debited, and then this unbilled receivable account will then be credited. That way, whatever is accumulated over the months into our unbilled receivable account will now be cleared with this entry. That way, the clearing account will then become zero. Okay. And coming to the third one, which is most important one, here the billing is not at start or at end, but it will be done in any of the periods. It can happen in any of the month. In our scenario, we've taken in the third month as an example. So in this case, is there any customer billing in the first month? There is no customer billing in the first month, right? So since there is no customer billing, customer will not be debited, but instead unbilled means not billed. Unbilled receivable account will be initially debited and revenue account will be created for $1 million. And this will also be the same in the second period. However, in the third month, when you are billing the customer, so the entry will be like this. So since you are billing, customer account will be debited, and since there is only one billing in this case, all 12 millions will be debited. Coming to credit, first preference shall be given to our unbilled receivable account, whichever we've maintained as a clearance account for the last 2 months. So that shall be cleared first. And then we have to give preference to our revenue account, whatever is the balance, since obviously when we deduct 2 million and 1 million, the remaining shall have to go to some account, right? Now that excess revenue will be taken to deferred revenue. Deferred revenue means, as I've already told you, we are deferring the revenue since the revenue is not to be recognized in the month, but it has to be recognized over the next couple of months or over the next couple of periods. So we have to initially credit to deferred revenue account, and then in the in the following months, when we have to recognize the revenue, we shall then recognize it from our deferred revenue account, and this will continue. So by the end of the 12th month, again, this deferred revenue will account also be zero because it will all be credited to our revenue account. This is how the journal entries are posted in RAR system as per our IFRS 15 or ASC 606. So the key, important takeaways from this is that customer will be billed whenever there is a bill only. It will not be billed every month, but whenever there is a bill, as we've said, it can either be at the start and or anytime during, right? So then only you have to bill, and in other cases you shouldn't. And then revenue recognition, if you observe, is happening in all the months. So revenue account will be credited in all the months. And the third thing is, and whenever there is no customer bill, that means when we are not billing, then unbilled account will be unbilled receivables account will be debited in place of a customer will be debited. And whenever you have a revenue excess of over our actual revenue recognition till that time, that will go to deferred revenue. Deferred revenue means we are deferring our revenue, excess revenue. These are different words used. So we have to whenever there is a revenue over our recognition amount, then that will go to deferred revenue account. Okay, thank you.